Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. It's 5th of January 2024 and here are the questions we'll be answering today. Why does Reliance want to launch its own GenAI? Can the biggest election year in history change global trade? Can gold deliver double-digit returns in 2024 too? And what is the Congress Party's NYAY promise? There's absolutely no room for complacency at Reliance, its chairman Mukesh Ambani told his employees last week. The statement, in a way, explained why the conglomerate is going big on adoption of artificial intelligence now. The company is also making a big shift towards green energy. But what will these new forays mean for Reliance? Shivam Tyagi finds out.
Reliance Jio Infocom chairman Akash Ambani had announced that the firm has teamed up with IIT Mumbai to launch a Bharat GPT program. The company will launch products and services in the media space, commerce, communication, and also devices, Akash said. He also said that the company has been planning to launch an operating system for televisions for a while now. The Bharat GPT program aims to utilize the power of large language models and generative AI or GenAI to reshape various sectors in the country. Akash Ambani said that the next decade will be defined by these technologies and that the company was working hard to launch AI not only in its own organization vertically but also horizontally across all sectors. According to reports, India's GenAI market will grow at a CAGR of 48% to reach $17 billion in 2030. Up from $1.1 billion in 2023. Around 84% of Indian CEOs are allocating capital to fund GenAI projects to take an edge against its rivals.
For a large group like Reliance, it makes sense to launch their own Gen AI as they have wherewithal of funding, access to technology and manpower, and in-house data as well as verticals which can provide them use cases. Headwinds would be in terms of their ability to be nimble footed vis-a-vis many others who are already way ahead. However, technologies like these are disruptive. An entity which seems to be leading today could be nowhere in the picture in the next few years. And Reliance has had the unique history of being successful in whatever they have ventured into. So we need to give this to them for the time being.
But GenAI is not the only technological leap Reliance is taking. It is also shifting towards green energy from fossil fuels. Reliance Industries chairman Mukesh Ambani announced in 2023 that the company has begun its work on developing Dhirubhai Ambani Green Energy Complex on 5,000 acres of land in Jamnagar, Gujarat. The company is aiming to build 4 gigafactories, investing Rs 60,000 crore in the next 3 years. The 4 gigafactories include one each for solar PV modules, electrolyzers, fuel cells and batteries. A solar PV module consists of cells that convert sunlight into electricity, while batteries are used to store the electricity. On the other hand, electrolyzers are used to separate hydrogen from oxygen, and fuel cells are used to convert hydrogen into electricity. Additionally, Reliance will invest Rs 15,000 crore across its value chain, partnerships, and on technology. But what is Reliance's strategy behind this new foray into green energy?
Historically, Reliance has always wanting to get into those areas where there is massive potential for consumption within our own country. And once they pick this particular product, which has got mass internal consumption, then what they do is they apply their expertise. They're extremely good in executing projects. They do it on time with no cost and time overruns, which gives them an edge. And they have phenomenal, pulse on the pricing, and they enter the market with a bang. They may not be many times the first to enter; they may be the second or third, but they enter it with a bang, with a very interesting pricing, and a very interesting scale. So I think they have seen the potential for all these so-called new technologies. They will become technologies of daily consumption in the coming years.
Through the solar PV Gigafactory, Reliance plans to enable 100 gigawatt of solar energy while achieving net zero by 2035. Nationally, India has set a target of having an installed renewable energy capacity of 500 gigawatts by 2030 and achieving net zero by 2070. A report by Sanford C. Bernstein says that Reliance Industries may earn between $10 to $15 billion from its new energy business. By 2030, the report estimates Reliance could capture a 60% market share in solar, 30% in batteries, and 20% in green hydrogen.
Put together, I think they have the subject mastery of capturing the entire value chain, whichever business they have entered into. And this is where I think you feel more confident about. If they are the largest energy consumer through the refinery programs, etc., that they carry out, they have all the business in the world to create, I think, the captive energy for themselves, which will systematically bring down the cost of energy in turn, I think, resulting into higher demand generation, and at the same time provide a significantly large amount of profit margin for them going forward. So, according to me, I think the choice is limited, but to keep innovating yourself, and that's what Reliance is good at doing it. I believe that I think this entire value chain proposition that they are capturing in each and every verticals, each and every business portfolios. I believe that I think that will be the not only a survival game, but at the same time, I think the growth and the profitability game as well.
Clearly, the new age tech foray for Reliance is a risk worth taking as they might get a first mover's advantage here.
The world too is bracing for a big shift. Over 50 countries across the world with a combined population of 4.2 billion will go to polls this year. India will be one of them. The outcome may shape the trajectory of international trade ties. Kastur Akhil dials experts to know how this year's major elections may affect global trade.
With over 40 nations heading to polls this year, 2024 is going to be the biggest election year in history to impact global trade. Geopolitics and divergence in countries' voting behavior will influence cross-border capital flows and macro-financial stability. Business Standard had reported earlier that at least 41 countries, representing 42% of the world's GDP and 41% of the global population, will witness a likely change of guard over the next 12 months. And the most consequential are going to be the ones held in the United States, Taiwan, the European Union, and Russia. Former US President Donald Trump is eyeing a return to the White House in November. Extrapolating from his previous stint, which a leading global media platform calls the stress test for democracy, Trump's return to office could potentially spell trouble for America's foreign policies, increased protectionism, and global trade wars.
The voters, they will not go by the economic projections for next year or 9 months later, etc. They may look at the most recent past and see what has been happening in the economy. Jobs have been cut. Inflation has been rising, and in Britain specifically, that has really created a lot of misery for the wage earning class, the middle class, lower middle class. And these are the people who will go to vote. So they may vote for increasing protectionism. And mind you, President Trump is a very strong contender for the Republican nomination, and unless the legal system comes in his way and prevents him from fighting the elections, he will be a candidate. And President Biden's popularity ratings have been going down.
With its principal rival behind bars, the Russian presidential elections in March will further cement Vladimir Putin's stranglehold until 2030. This in turn will augur ill for global oil supplies. Meanwhile, Taiwan's presidential elections, scheduled on 13 January, could decide Beijing's next move, as its stance towards Taiwan's current ruling party has been hostile. The ruling Democratic Progressive Party's return to power may provoke a Chinese invasion of Taiwan. This would not only impact US-China ties, but also have far-reaching economic outcomes where blockade of key trade routes, disruption of semiconductor and commodity supply chains cannot be ruled out. Despite the geopolitical consequences, experts' outlook for the Indian economy is marked by cautious optimism. As India heads to general elections in April-May, experts believe the possible re-election of the current ruling BJP at the centre will help maintain India's appeal to foreign investors. Market analysts also consider India to be the only bright spot in the global economy, with market-friendly policies and capex outlay being some of the driving factors.
Other things being equal, India is likely to be a more attractive destination, both for investment, also as a trading partner. But of course, much will depend upon whether we are able to continue and intensify the various reforms in the Indian economy. So while the Indian economy is likely to be impacted and is already being impacted by external factors, this is likely to intensify because these wars are likely to continue in the coming year. But relatively speaking, I would say, India, which is globalized by many other countries, has a very large domestic economy, is likely to fare better than most other countries. That is what my assessment would be.
All of this comes at a time when the message for 2024 from India Inc. has specifically called for a focus on geopolitics, along with technology and people being the other two major areas. The Organization for Economic Cooperation and Development, or OECD, predicts a slowdown in global output in 2024 as a consequence of high interest rates. According to the OECD, global growth is not expected to edge up until 2025, which is when global central banks are expected to slash borrowing costs. The global gross domestic product is forecast to rise by 2.7% in 2024, marginally down from 2.9% in 2023. The United Nations Conference on Trade and Development emphasized the outlook for 2024 remains highly uncertain and generally pessimistic in a recent report, on the back of ongoing geopolitical tensions, escalating debt, and widespread economic fragility. Experts thus agree that 2024 could prove to be the year of the biggest electoral battles across nations that would redefine global relations for years to come.
But amid the changing global order and the uncertainty that it brings with it, India appears to be an oasis of stability. Its economy is expected to grow at 6.5% in the ongoing financial year. Its equity markets dazzled with stupendous gains in 2023. And gold as an asset class too quietly and steadily delivered over 13% returns in 2023 on rising bets of rate cuts and weakening of dollar. So what's in store for the precious metal in 2024? Rex Keno finds out in this report.
After 2 years of underperformance, gold delivered double-digit returns in calendar year 2023, owing to a moderation in US growth outlook, rising geopolitical tensions, and hopes of a reversal in the interest rate cycle. The yellow metal closed 2023 with a gain of 15% on the MCX. In the international market, gold prices rose nearly 13% last year. This came after a tepid return of 0.6% in 2022 and a negative return of 3.6% in the year before. Going into 2024, analysts at ICICI Direct expect gold to move higher on the back of monetary policy easing and steady demand from central banks. Typically, gold prices go up when interest rates go down. This is because rising interest rates make stocks, government bonds, and other investments more attractive to investors. This, the brokerage said, could also revive inflows into gold ETFs after a steady decline over the last 2.5 years.
A rally in gold will be supported by hefty rate cuts by key central banks, especially the US Federal Reserve. Central banks are expected to cut rates sharply on economic slowdown as inflation moves sharply lower to their respective targets.
According to the World Gold Council, central banks bought 800 tons of gold, up 14% year-on-year as of October 2023. Analysts at HDFC Securities, meanwhile, predict demand from China, the world's second-largest economy, to keep gold prices buoyant since China needs to add gold reserves to add acceptability of yuan for trade across countries. Overall, analysts expect gold to deliver double-digit returns anywhere between 10 to 12% in 2024. Against this backdrop, Prathamesh Malia of Angel One recommends accumulating MCX gold futures on dips.
In 2024, gold as a commodity would see close to around $2,350 mark per ounce in the international markets. On the MCX, it is trading at close to around $63,000 as of now, and the best accumulation zones for this commodity would be somewhere around 60,000 rupees per 10 grams, and we see close to around 68,000 rupees per 10 grams mark by the end of 2024.
Thus, the yellow metal is expected to hold onto its sparkle in 2024, riding on rate cuts and risk of escalation in geopolitical tensions. On Friday, January 5, global cues and stock-specific news will continue to guide trading action on Dalal Street.
He's making plans for an early retirement. Business Standard.
Moving on, political parties are gearing up for this year's general elections, and they are trying to outdo each other in wooing electorates. Opposition Congress has now promised women at least 60 to 70,000 rupees annually under its NYAY scheme. Ayush Mishra talks more about Congress's NYAY promise.
Speaking at a rally in Nagpur, Congress chief Mallikarjun Kharge said if Congress comes to power, it would implement the NYAY scheme and provide women with an annual sum of at least 60,000 to 70,000 rupees. Narega, PM Kisan and the proposed NYAY are all examples of direct benefit transfer. It entails the direct transfer of government subsidies and financial aid to the bank accounts of qualified beneficiaries. In January 2019, the concept of initiating a basic income support program for India's most impoverished citizens was proposed by the then president of the Congress party, Rahul Gandhi. Subsequently, the party collaborated with Nobel laureate Abhijit Banerjee and consulted several other noted economists to refine and shape the idea into a manifesto commitment. The Minimum Income Support Program, or Nyuntam Aay Yojana, in short NYAY, will target the poorest 20% of all households, the party said in its manifesto. Each family is assured a yearly cash transfer of Rs 72,000. Preferably, the funds will be directed to the bank account of a female family member or encourage her to open one. The party specified a design phase of 3 months followed by a pilot and testing phase of 6 to 9 months leading to a phased rollout. The projected expense is anticipated to be less than 1% of the GDP in the initial year and less than 2% of the GDP in the subsequent years. As the nominal GDP expands and families progress beyond poverty, the cost is expected to come down proportionately to the GDP. The party expressed its intention to execute NYAY as a collaborative initiative between the central and state governments. The funding for the scheme would be derived by generating new revenues and streamlining expenditures, according to the party's statement.
I'm backed by the nation's trusted bank,
SBI, the banker to every Indian.
Meanwhile, Congress has renamed its Bharat NYAY Yatra as Bharat Jodo NYAY Yatra. Party leader Rahul Gandhi will lead it beginning 14th of January. That's all for today. For more news, views and insights, please log into business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.